Hi, today we are looking at books of account. And based on the requirements, we're going to be looking at the definition of books of account. We're going to be looking at the classifications. We're also going to be looking at the types based on the classifications, and then we're also going to be looking at illustration on the types of the books of account. So the definition of books of account, from the word books of account, what it's trying to tell you is that there are books in which transactions that occur in an organization are recorded. So depending on the type of transaction, we have different books to record them. So we can simply define books of accounts as books in which transactions are first recorded as they occur or as they take place. Look around you. Small businesses around you, organizations around you, when transactions occur, they always have books in which they record them. These books are called books of account, and they vary depending on one organization or the other. So we are also going to be looking at the classifications of books. Now, the classifications of books of account are basically into two. We have the specific books and the non-specific books. As the name implies, when you hear specific books, it means that the books are meant for recording specific transactions. So what we are talking here is this. When they say specific books of account, we mean those books of account that can only record a particular type of transaction. If that transaction is not for that book, then it cannot be recorded in there. Specific books of account include sales day book, returns inward book, purchase day book, returns outward book, and the cash book. Now, the non-specific books, as the name implies, is used for recording any transaction that cannot be recorded in the specific books. I told you that specific books are for specific transactions. So once a transaction cannot go into the specific books, then they come to what? The non-specific books. At this level, we are looking at just one basic type of non-specific book, and that is what we call the main journal or the journal proper. So, now we understand that books of account are books that record transactions as they occur. And we understand that books of accounts can be classified into specific books and non-specific books. We also understand that specific books are books for recording specific transactions, and non-specific books are meant for transactions that cannot go through the specific books. Now, I've been mentioning transactions. What does the term transaction mean? Transaction simply means exchange. Everyone is involved in one type of exchange or the other. Now, if you look around you, you're buying, someone is selling. That exchange is what we call transaction. And transaction can be classified into cash transaction, credit transaction, trade-ins, or barter. Now, cash transactions, we all are involved in it. You bought a bus, you pay the conductor. That is a cash transaction because there's an exchange. You pay for a particular service. You go to ShopRite, you buy goods and you pay before leaving. That is a cash transaction. What are we talking about here? So the exchange of service or products for immediate payment or immediate clearing of checks or draft is what we call cash transaction, credit transaction. It simply means there's an exchange, but there's no immediate payment. It's around us as well. You went to the retail shop close to you, got some biscuits, and then say you are paying in some days after that day or in a later date. What has happened is simply called a credit transaction. So we can say credit transaction is the exchange of services or products for payments at a later date or period. You bought something at this point and you promise to pay later. That is a credit transaction. Trading or barters. Now think of you having an old car and then you want to buy another car, but there's no cash for the new car. You approach a company and then told them you have an old car and then you have some little cash. And then they said, yes, give us the old car and a little cash and then we'll give you a new car. It's an exchange. But what we call that kind of exchange is a trading. So what do we say? Trading is the exchange of products for products plus what? Cash. Go to Cars 45. They can exchange cards for a new car. And they can as well exchange car plus cash for a new car. This simply is to a fair value for the exchange. But understand something. In trading, there have to be an additional cash to the product you are using to exchange for the new product. Barter is simply the exchange of goods for goods or services for services. It has happened. You could approach a friend and say, let me eat out of your meal so you can eat out of my meal. The idea is simple. You are exchanging goods for goods. So where there's an exchange of goods for goods, we refer to it as barter. Changing goods for another good, but topping it up with cash to have a fair value is what we call trading.